Hey guys, hello and welcome to Moneycontrol. I'm Manisha Gupta, and what we're talking about today is crude oil, where the prices have declined to a 2 month lows. We're trading in the negative right now after falling 10% in the previous week and after falling more than 3% in the week prior to that. So the last couple of weeks actually have closed in the negative for the crude oil prices. If you remember, November began with a high of $98 a barrel for the Brent crude prices, and we're trading at around 86. So it has been more than $10 of a decline in last 2 weeks coming in for the crude oil prices. Ditto is the case with WTI. That one fell 9.5% in the previous week, and we've come down quite steadily there. So much so that in the last 1 month as well, we have now turned negative to the tune of 5 to 6% for both the crude varieties. Well, various reasons for that. One is the US dollar index, which has declined 0.5% in the previous week, and that is one thing you'll have to watch out for. The other is the surging COVID cases in China to the tune of 23,000, which is the highest since the month of April. So clearly, China demand will continue to be a bit of a concern. November imports have been lowered, and China already has cut loading of crude from Saudi Arabia for the month of December as well. And the reports suggest that it could be 50% of what China usually does in a month of December. So the demand clearly taking a hit there. The other thing is about Europe, where the supply concerns seem to be easing. Europe has been building up inventories, and the winter season has started with the stocks all full, up to nearly 95 to 100% for some of the countries there. And that clearly has let the concerns ease off. The third thing is it's not just about China and Europe. The US production also is now surging up almost close to the pre COVID levels. But the US production numbers, the US manufacturing activity, all of those numbers have been on the weaker side. Manufacturing activity is the lowest in last 11 years, and that is what is bothering the markets in sense of demand here as well. But what you need to watch out for is now one on demand, where we have seen OPEC, IEA all tell us that in this year and the next year as well, the demand growth is not expected to be as strong. The other thing the street will keep an eye on is December 4. That is when the OPEC and allies will meet and talk about the production policy going forward. And if the crude prices continue to decline the way they are, then we could be looking at more production cuts here. The third thing is 5th December. That is what you have to watch as well, because that is when European Union and G7 will talk about putting a price cap on Russian crude oil. What really conspires to that? What is the price cap that they're talking about? Is there going to be a quantitative measure as well? All of those things will drive the crude prices moving on from here on. Markets will also watch out for the US Fed meeting minutes that are going to be released in this week as well. So there's a whole host of macro and fundamental data to react to, and the crude prices, while are expected to be volatile, but some more bearishness is what the street is expecting from here on as well. On the lower side, perhaps another $3 to $4. On the higher side, a $7 to $8 of a jump up is what you can see for crude prices for the next 15 or 20 days to come.